Hey everyone, David McCree CPA here. Here are 20 year-end tasks for nonprofits. Count your inventory. If you're carrying any type of inventory, be sure you do a year-end count. Download all your bank and credit card statements. Save all of them as PDF files on your computer in addition to keeping paper copies. Download the full year of transactions for all of your bank and credit card accounts. Save them as CSV or docx files. This is especially important if you're not using QuickBooks, with transactions being automatically downloaded from the banks. Regardless, definitely do download those transactions. Download payment processor transaction reports. So that would be transaction reports from platforms like Stripe, Square, or PayPal. Be sure you have the date, the description of the transaction, the amount, the fees, the sales tax, the shipping. Again, save them as a CSV or a docx file. Reconcile your account statements. All your bank, credit card, and payment processor statements should be reconciled with your books. That way you've made sure that you've captured all the transactions. It's so easy to do if you're using QuickBooks or some other accounting software because they have a reconciliation feature in the software. So there's really no excuse for not doing it. Lots of YouTube videos out there that show you how to reconcile. Verify that all accounts have a normal balance. What does that mean? It just means that certain accounts normally have debit balances and certain accounts normally have credit balances. So if you're using accounting software like QuickBooks, what you can do is just run a trial balance report. Okay, and that way you can quickly scan the accounts because the accounts are listed so that the balances are in two columns, with the debits on the left column and the credits on the right, so you can quickly see if they have a normal balance. So asset accounts and expense accounts should have debit balances, and liability and income accounts should have credit balances. If they don't have a normal balance, then find out why. Verify W-9s for contractors. So you want to make sure you have a W-9 for every independent contractor that's paid $600 or more during the year for services that were provided to the organization. Right? And the best practice is to have the independent contractors provide you with the W-9s when you first hire them before you pay them. Okay, that's really the way the IRS expects you to do it. So it's a good idea to work that into your workflow. Prepare and e-file your IRS 1099 forms, usually due January 31st. And don't fool around with paper forms. We're all in the electronic age here, and it's so much easier. I use a website called track1099.com. You might want to give it a try. I have no financial interest in them. They just work well for me. There's others. Don't do paper forms. Too much of a hassle. Review your donor acknowledgments. So wonderful people donate money to your organization. You send them a letter saying, hey, thanks for the donation of $500. And there's other language that needs to be on there. Be sure you're caught up on those before the donors start filing their tax returns. And even if you're a private foundation, and this video is really not about private foundations, but if you have a private foundation and you donate money to your own foundation, you still need to have the foundation issue you an acknowledgement letter if you want to take a charitable donation for that. If you're getting non-cash donations and some of them are more than $5,000 and then you turn around and sold those items within 3 years, you may need to do a Form 8282, so you need to check that out. Update your donor records. If you keep really good track of your donors in QuickBooks or your accounting software, this is usually fairly easy. If you're using some other method like Excel worksheets, you may have to do a little more work, but you should be able to generate a list or a report of donors that meet certain criteria. So for instance, if your return preparer says, hey, give me a list of all donors that gave more than $5,000 during the year, you should be able to do that. List all donors who gave more than $5,000 during the last 5 years. You should be able to do that. List the amount given by any officer, director, key employee, or their family member during some period of years. You should be able to do that. And every donor record should indicate the type of donor it is. Is it an individual, a government, a for-profit company, a donor-advised fund, public charity, private foundation? Very important. Update your fixed asset records. Usually small organizations especially, they buy equipment during the year, computers, furniture, and they just kind of lump it all under supplies and something like that. And so it's the preparer's job, the tax return preparer's job, to go in and look around in all those accounts and see, oh, look, they purchased something for $1,000. Let me find out what that was. Because a lot of times that needs to be capitalized on the balance sheet instead of expensed. Okay, so usually an organization will have a capitalization policy, and that is, okay, anything we buy that costs more than $1,000 and it's going to last more than a year, we're going to make sure and put that in a separate account so the accountant can see that, and they'll know, they can decide if that needs to be depreciated on the balance sheet. Review outstanding liabilities. So if the organization has any outstanding loans to anybody, be sure that any payments on those loans are reflected in the balance, and that any interest that was received on the loans is recorded as interest revenue. You want to make sure all your board meeting minutes are organized, any board resolutions or any other documents related to board actions. Secretary of the corporation usually does that. Update your conflict of interest disclosures. If you have a conflict of interest policy, usually every year, once a year, you'll distribute questionnaires to the officers and directors, key employees, asking them if they have any conflicts to disclose, right? And they sign that they either do or don't. Be sure you document related party transactions. So if any officer or director or family members engage in financial transactions with the organization, you want to make sure you document those. Nothing wrong with it usually, but just in the interest of transparency, that has to be disclosed in many cases. Document your program service accomplishments. So just prepare descriptions, and a lot of organizations just do this anyway. But prepare descriptions and key metrics of program service accomplishments for the Form 990. How many people were attended your events, how many people were helped by your programs, what was accomplished, that's kind of things. Secure your digital records. Make sure you have backups of everything. This is especially important because if one person has everything and then that person disappears, they have a falling out with the organization, or they die or get sick, and you can't get the records back in many cases. Review state filing requirements. Do you have any state level filings, annual reports, or charitable solicitation renewals? Make sure those are done. Make sure all your transactions are categorized into proper categories. If you have fundraising events, make sure the categories are such that you can match the expenses from a specific event to the revenue that was generated by that event. Same thing if there were any contributions that came in as a result of the event, make sure that you can associate those with that event. Finally, make arrangements for IRS Form 990 preparation. I know a lot of organizations rely 100% on their CPA or their tax return preparer, and the IRS says no, it's the organization's responsibility, management, board of directors. You can depend on your CPA, but you need to make sure that you're backing them up. Make sure that, say, hey, this is April 15th, the return's due in a month. Are we going to file an extension? Are you going to have the return finished? That type of thing. Remember, this is important. If you have not received a signature form from your tax return preparer, that means that your return has not been filed yet, okay, because you have to sign it. Okay, very important to understand that. So I hope this has been helpful to you. And if you would like to have all of these 20 items in PDF file format, just look down below in the video description, and I will have a link to my website where you can download the PDF file. Okay, Happy New Year.